Today on the CEO Barbecue, we're looking for tantalum in Cote d'Ivoire together with switch metals. If you want a bullet point summary of this and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, although the company you're about to hear from has not paid us for the production of this interview, you should still not treat this video as research. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. In any case, please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is an extremely tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, and it is also going to contain forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. Although this company has not paid for the production of this interview, it doesn't mean they won't become a client in the future. They might. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Switch Metals is listed as SWT on the London Stock Exchange, where over the last 3 months, the average volume has been only about 7,500 shares, but this is a newly listed company, so that it's still very much an illiquid stock, but they really just recently got listed. The stock's 52-week high is 9.8 pence, and its 52-week low is, well, technically 0 cents, because again, it just got listed. I'll say that probably 12 more times, but it just got listed. With the market cap's now about 10 million British pounds, there's about 118 million shares outstanding. That means that today this is an 8.5 pence stock with a 50, and I typically would give you the 200-day moving average as well. So respectively, those are 6.6 and 1.7 pence. But again, just got listed. Those numbers may be a bit off base. This is also where I typically provide a breakdown of the company's financials and give you the exploration to administration ratio to see how much of their cash goes into the ground versus how much of it is spent on running the company. But that's given that they just launched their first exploration program and have again only been public for a few months, those numbers won't really make too much sense right now to give it to you. So I'd encourage everyone to pay attention to their website and make those ratios for yourself once they have a new financial statement that might be a bit more representative of how they operate. And that's something Carl and I will touch upon later in the conversation as well. Now, Switch's presentation says that they're focused on developing a conflict-free, ethically sourced tantalum supply chain out of Cote d'Ivoire. So hopefully we also get a better understanding of what exactly that means in a couple of minutes here. The goal here is to develop essentially a near-term production out of coltan concentrate from shallow placer-style gravels at what they call the ISIA project, which is located in south-central Cote d'Ivoire in a transition zone between the central forested plateau and the southern lowlands. And why I'm telling you that is because that's resulted in a combination of lateritic soils, saprolite profiles, and stream networks, which it can be important for these type of deposits. And again, I'm hoping to understand the significance of it later on in the conversation with Carl. ISIA is not the only project, though. They control nearly 3,000 square kilometers of licenses and applications across 3 districts in Cote d'Ivoire, that being, again, ISIA itself, Bouaké, and Tiasale, where they're hoping to find not only tantalum, but also niobium, lithium, and rare earth elements. And as you can see already, I can barely pronounce some of these, so hoping Carl will tell us more about these metals later on and how that would work with these deposits or potential deposits. To do that exploration work, they've currently got about £1.5 million in cash. So hopefully an update on budgeting and how much everything is going to cost later on as well. And as you can see in here, there's loads to discuss here today, which means that it's time for me to shut up already and Carl give you the word. But first of all, thank you for being here today.
Thanks, Antonio. Thanks for arranging this and interviewing me today.
Pleasure's all mine. I'm looking forward to learning about it. You don't get to hear these kind of stories every day, something new. So always exciting. And what do I know you from your director position in one of my holdings, Wally Resources? This is your first time on the CEO barbecue, which means that we'll have to do a smell test before the actual grilling starts. And we'll start with the man running the company, which happens to be yourself. Who are you and why do you think you're the right man for the job?
Yes, thanks, Antonio. And so starting on Awali, I mean, in addition to being a director, I founded the company in 2015. So I was, before then I was working investment banking in London at BMO Capital Markets. So I started my career as an investment banker after a chemical engineering degree in the UK. And I graduated from Imperial College as well in metals and energy finance, and then moved straight into banking from this technical background, and decided after a few years in banking that I wanted to do something a bit more entrepreneurial. So moved back to my home country, which is Cote d'Ivoire. So I was born in Cote d'Ivoire and grew up here before I moved to France and the UK. That's when I started Awali, and participated in that story until now as a director, and more recently decided to do it again with a more industrial focused metal, and that's where the interest for coltan and the birth of Switch really came about. So that's the past few years of my career, but there is a bit of history there, both with the country and the mining sector.
Mm. So what else do you do now? Is it only Switch and Awali? And how much of your time would you say goes towards Switch?
Um, fully focused on Switch. That's most of my time. Awale, of course, I have been advising and still advise the CEOs of Awale. The recent one, of course, that is Andrew. So I'm generally in touch with Andrew and advising him on anything in country. But that's less of my time than Switch is right now. So Switch has been the core focus for the past 2 years.
And you're based in Abidjan, or where in Cote d'Ivoire are you?
Yes. I mean Abidjan, the capital. I mean the economic capital. The political capital is Yamoussoukro. So I'm in Abidjan full time. And any travels I make is from here. But I've been based here for the past 10 years.
That's actually a bit of a controversial topic when you said the economic capital is Abidjan, because I know that it was actually through a wallet that I learned that Abidjan is not the actual capital, although nobody really believes it. That might be a podcast in and of itself. What about your technical team, Carl? Who are they, and have they worked in similar geologies before?
Yeah, we this time what I try to do. I mean, as you know, with new ventures, you have to be cautious on costs, and before we had the licenses and grew the portfolio, we had to be very disciplined when it came to recruiting. So what we did, and we kept that model. We started with a good base, and that's how we started Lawali as well. We started with a good base, a good foundation of local technician and geologists, young, dynamic, very motivated group of guys, and that's the technical base. And of course, there is some expertise that has to come because because as you know is pretty new to mining, and especially when it comes to a different metal than gold, which is really has been focused historically. So we decided to complement that with some expertise, and that's coming in the form of consultants who come on a case by case basis, both on geophysics side. We use Sagax, was also used by Awali, and in addition to that, we have Aretus Geology, which is a French based firm, ex-BRGM and Arriva, and specializing in technology metals and rare metals. They are working for big groups, very discreet, which I like, but very good signature, and they have been involved with the project from day one. You'll be surprised by who else they work for, but very good name. So they have been assisting us both as an advisor, but also they play the role of competent persons going forward for us.
Hmm. So when I ask about whether they have specific experience for the task at hand here, I'm thinking specifically tantalum coltan, right? So because of how specific that is, really, does anyone really have experience with it, not only in your team but like in the world?
Yes, because the way it's explored is pretty similar. I mean, you explore for pegmatites. Pegmatites are the hard rock, so they're not different from lithium exploration or some other metals, or in some cases tin, which is one common one nowadays. In that sense, yes, there is expertise. So you look for pegmatites. Now the pegmatites might be mineralized in tantalum. They might have some lithium, they might have some tin, tantalum, and lithium, or a mix of all of them, a bit of rare earth. So that's where you have to be selective, and sometimes that's a problem of pegmatites, and it's almost a financial decision or
Hmm.
strategic more than a geologic one, because the geologists would be very happy to find all these metals in one place. However, you would be surprised to find that the more complex a pegmatite is, the more difficult it gets to extract any of these metals out of it, and that's where sometimes you have to make strategic decisions, just to select the ones that are probably the less complex, so the less exciting for the geologist and the technical team, but the ones that you can actually make money from. And in our case, coltan and tantalum, which is actually a metal containing in that mineral coltan, is our focus, and we're very lucky to have most of our pegmatite mineralized in just that at this stage, which allows that focus.
The way you explore for tantalum is very interesting to me as well. You touched upon it there, but I'm kind of hoping that later on in the conversation we'll be able to go through your exploration process, mining and processing potentially of this metal. So we'll definitely talk about this more specifically here. Insider ownership, if I'm getting this correctly, is about a third or 34% of the company, to be specific. Is that who's that? I mean, is that mostly you, or who owns those shares?
The insiders are mostly me, the original director that was sitting with me. So another director called Mamadou Doumbia, he's on the board as well. He was part of the group and that we formed privately, that funded the company until we listed. So those, and then the CFO also participated in the raise, and
Mhm.
the rest of the board also did participate in the raise. So that forms most of the insiders listed.
Okay. How did you get those shares? Is those founder shares, or buying
A
and
mix of
financing? So
both.
how did that work?
A mix of both. So the bulk of my ownership is through founder shares. I founded the company back in 2000, late 2017, early 18,
Yeah.
privately, and built it from scratch. So got diluted, but kept some of it, and that's the bulk of what I still have. But I also participated in the following race, including the IPO. So I did also put some money into the business, both privately, but as part of the listing.
How much money do you think you've put into it personally since the beginning to acquire those 34% in total?
Yeah. Excluding sweat, which is a few
Fair.
years of working without getting paid, real cash put into the business. I put today a bit more than 100,000 pounds into the business myself.
Okay. They should make a spot market for sweat as well, so that we can value it more easily when we're valuing these shares. What about the other 2/3 of the company? How many people are responsible for that ownership? The rest of the company that's not insiders.
Yes. So again, just going back on the inside, about some, you'll see that on the register you have a big chunk that is held by a holding company called Switch Mauritius. That's the holding company that was the original private company. So it's about 34%, and that's where I have most of my shares, in addition
Yep.
to what I added at IPO, just to
So that's
clarify.
the that's what I assumed is the insider ownership, right? So 34%, that's the insider ownership.
Yes.
Okay.
So
Yeah,
that's
that's right.
that's the historic holding, and then the rest of the two-third, about a third of it, was the new money that came as part of the IPO, and so new shareholders. It's pretty tight. We kept it quite tight to a list of long-term shareholders, mostly well, high net worth individuals, family offices, and the other third was actually made up by the shell company in which we reversed. So we reversed into a shell called a SPAC called Onero
Mhm.
Energy, which was a clean SPAC listed in London, and that had a very tight register, which is what really attracted me to it. I think when you want to do this SPAC or reverse, you do need to be careful about who you're merging with,
Hmm.
and yeah. their intentions. And luckily, as you probably have seen, despite the fact that we don't have that much liquidity today, well, it hasn't dropped, which again shows a bit of commitment, which is quite rare, and it's probably one of the first positives out of the transaction.
Well, I did want to ask you about that because, yeah, that other third, who are those people? Have you been able to get some of them on the phone? Do they want to keep holding shares of Switch Metals, or because they're essentially legacy shareholders? They've not necessarily elected to buy your company specifically. So what's the case with them?
No, I mean, they first they voted for a transaction, so that was the approval from from the start. From the start, they approved this transaction, and on top of it, you will be surprised, but most of them, or at least a big chunk of them, participated in the IPO. So there was additional support and skin in the game that they added on top of what they already had. So that was a good validation of what we were at that point and the strategy going forward. Yes, we have a good list, and I made sure I knew some of those and also their intentions going forward. And as part of the listing and the transaction sign off, we had some firm commitments and they participated. So their strategy in terms of investment is to hold this until the next milestones are hit, and they see that strategy with near-term cash flow as one that is clearly different from a typical mining or exploration story, which I think is the real attraction here for most people who are in the stock or will be buying going forward. We're trying to have a very hybrid model, which is quite different.
That hybrid model is definitely interesting to me. So we'll get to that here in a second as well. What's the warrants and options situation? I think there's 5 million warrants, or not. I mean, correct me if I'm wrong, but where's that now? Who owns it? What's the situation?
Yeah, most of the warrants. I mean, there's some founders warrants from the SPAC, and there are some additional options, mostly for management. So the warrants that came with the SPAC represent a couple of million, a bit more than five actually. They were more in the range, above 20, and most of them, however, are really linked to certain thresholds that have to be hit in terms of share price. So we have set the threshold quite high, most of them being double or more of the current price. So this won't be in the money now, and certainly when they're in the money, most shareholders would be very happy. So we took care of that as well.
Right. But you control those essentially. So what I'm getting out of this, like, it's not, they could be uncontrollably sold into the market on a liquidity day or something like that. That's really what I'm looking out for here.
Yes, I confirm that. I mean, they're very well controlled, and we have our eyes and control over what's happening with that. And it was, again, all these questions I had to answer myself, because before migrating into that entity, we had to be very careful because there's so many shell deals out there. You have to be careful. And yes, I did a lot of my DD, and luckily it seems to be aligned with my expectations so far.
I appreciate you saying that right there, because it makes it seem like I know what I'm doing when I'm asking these questions, which isn't always the case. But no, though, yeah. Well, jokes aside, those are important questions. A lot of times people will be like, "Oh, why are you going through these boring things?" Well, oftentimes the boring things are the important ones, and it's the type of work that you guys do on the back end as well. Royalties, that's obviously something you've looked into as well. Are there any royalties on any of the projects?
No, and I'm very, very happy to say that there are no royalties at this stage on the flagship projects. So both the Isia and the Bouake project have no royalty, and we hold 100% of these licenses. There is a royalty potentially on the lithium project, which is Tiasale, and that only kicks in assuming we go as far as production. And more importantly, as a full acquisition of 100% of that asset as well. So, and the royalty might be 1% if it kicks in. So, very clean and full exposure to the asset base that we have.
There would be, I assume, government royalties at a certain point? That's something that we might touch upon later on if you're in production, right?
Yes, if yes, once we get into production from a government perspective, the government has a free carry and a royalty. For these commodities, the royalty historically, or at least what has been disclosed, has been 3%. There, as opposed to gold, there is no scaling grid royalty for this type of projects as of today, which is different from your typical royalties that you would see on gold projects in the country. So 3% is the expectation from our side, from the government, and the free carry is currently 10%.
Hmm. Sometimes I wish I was a government and get a free carry in all these projects and a royalty on there. Still on the same topic,
and
Carl.
taxes. Don't forget taxes, eh? I
And
mean,
that's on top of the taxes, right? I did forget about that. I was getting greedy on the free carry alone, but still on the same topic though, Carl, here, and still within our smell test, if you will, talking about incentives. Now that you're a public company with what looks like a clear and defined plan, which again we'll discuss in detail here, but how is executive compensation going to be structured and determined? What are your KPIs going to be tied to?
Yes, the first thing to mention here is just to show the commitment of management, including myself. I mean, we're getting paid right now half of our package in cash. And that's an effort we're making because we believe in the future of the company. And the other half is, as disclosed in the admission document, is currently unpaid and kept on the balance sheet. And we will, depending on where we sit on the next milestones, either convert those into additional shares or get paid upon the next raise, depending on where we are. So we're basically happy to work for half that compensation. So that's very important to mention because it shows management's commitment. In terms of salaries, I mean it's all disclosed. I mean I'm now on most of the management is getting paid mostly aligned on what market expectations would be in the UK. I'm on 125, that the CFO is at 100, and we're getting half of that paid. So that's and we don't have a massive team. So it's really CEO, CFO, the operational team, technical team, and three other board members. That's what we are.
This might be a good segue into talking specifically about Switch, because listening to how you think and talk about insider compensation also makes me think about your business plans and aspirations long term. Because again, it seems like you're aligning yourself. You want to profit essentially over the long run, and that's what I'm looking for, of course. But excuse me, what are they? What are those aspirations? Do you want to create a small scale mining company and maybe naturally grow it that way, or are you preparing this for a takeout at some point?
The objective is really to become a producer as soon as possible. Whether that's defined as small or large is something that would evolve with time. So we want to start producing a metal, and selling that metal is our urgent objective. My view on this is that cash flow security you create, even if at the beginning it can be classified as not big enough, and it's never going to be big enough anyways, gives you the comfort you need to explore and buy or find bigger things. So the quicker we get there, the quicker we're a different company, and the quicker we can add assets or grow production. And that's where, based on our screening, we've picked coltan as priority one, because it allows us to do that with a very low capex and within a reasonable time frame, generate some profit and create that cash flow foundation that would differentiate us from a typical explorer or a typical small or junior mining company. Once we have established that, we can keep growing production because we have a very large land package, and we can just face and the demand from clients clients list that would get longer and longer, or we can then opt to add assets if we're not happy or we can't find the bigger deposits we want within our portfolio. And that cash flow foundation also allows us to be very selective, very pragmatic when it comes to making those decisions, which is not always the case when you're a pure explorer or a pure junior explorer. sometimes you just get into that situation where you're a bit desperate to find something that's never going to be there. So that's really the thinking process behind Switch and why we focus on coltan. And it happens to be a very interesting metal. I'm sure we'll touch on that, but it allows us to basically execute on that strategy. So to in a few in a small sentence, yes, the objective is to produce and become a miner as quickly as possible. And no, we're not positioning the company for a sale.
What would happy be in your case? You said if we're not happy with what we found, if it's not the bigger deposits that you're looking for, what does that mean? Like, well, what's your target size? What would you be happy with from a size perspective?
My view is if we generate in the early days something with a net cash flow or a free cash flow of in a range of 5 to 10 million per annum, it would be a good base for us as a starting point. And of course, the upside from there is going to be whatever we can add to it. If it's tens of millions or hundreds of millions, we'll see. But between 5 and 10 in terms of net free cash flow from the coltan strategy in the early days, it gives us that good foundation to build upon, and that's really what we're targeting today.
I understand it might be hard to answer this question, but how long could that plan take? Those 5 to 10 million bucks in free cash flow. How long could that take? And are there any comparables that you're basing your expectations on?
How long it to take? I mean, the objective is, I mean, we have very ambitious targets. So, I don't want to commit to time as you would expect, but there is a level of commitment already in the admission document and what we've published. So within 2 to 3 years, we want to be there in terms of starting production. We'll have to ramp up, of course. I mean, the first production is not going to deliver the margins or the net cash flow I've mentioned, but if within the next 3 to 5 years we can achieve that, we will be very happy. 2 to 3 years just to have sight on that cash flow is already a good target, and then we'll grow the cash flow from there. It might exceed it. It might be just a line on what I've described. So that's the time frame on which we're working. Now, the next phase after that will be, of course, to double, treble, add assets, merge with something, buy something, and we'll see how much more it could add. But the aspiration is, I think about the aspiration not in terms of size of the assets we might find, because I really want to take a different approach to it. It's more about how much cash this business could generate thereafter. So we would look at other deposits that would have a fast track into production. We could be a bit more selective at that point to see what we want to buy and what we want to build, as opposed to what the size of the deposit might be, because as we know, sometimes things are very big but never generate anything. So the selection is going to be more around cash flow and something we can actually build. Either in the next few years or thereafter, depending on what we see in the portfolio. So the addition within the portfolio will really be just the scale of the tantalum and the demand from clients.
You're now treating this as an actual business. I thought in junior mining, you're supposed to treat it as just a paper vehicle to print more shares and get rich off the shares. I thought that's how it's supposed to be done. But we'll definitely talk about how you're going to get there as well, more in detail again, as I said. But what about money? You say 2 to 3 years to have visuals on that cash flow, essentially. How much money are you going to have to spend in between?
The money we raised, so we raised 2 million upon IPO. Some of that went to cover some of the costs, and then the rest of that is leading us to the first milestone, which is the resource definition for later this year. And we have some cash to cover the next phase, with being the PEA study. We will then look at, once we have the results, we'll start working on different financing options to fast track the project into production, and that would include a mix of additional equity and more importantly some project offtake financing, considering the size of what we're trying to build, which will fit within a range of 5 to 10 million in capex. So it's very low capex, And so if you add the 5 to 10 million plus the two ish that we currently have, that gives you something in the range of, maximum 10, 15, which is what you would need to go from today up to first production on our current base case, which is very rare.
It
It's
is.
it's and you're talking of that as a base to the free cash flow I've mentioned. So shows you how quickly this thing could be a profit generator, and at least that's what we're trying to frame, and we believe in that strategy.
Hmm. How do you plan to finance the company into those different stages? And this is holistically, again, I don't necessarily need a specific step-by-step plan, but I'm thinking, is it just straight equity? Are you thinking a mix of debt and equity? Is that even possible? Or would a JV even be of interest here?
We're looking at all these options. That clearly it's not going to be full equity. We as one of the largest shareholders, if not the largest shareholder of the company today, of course, it matters to both me and the rest of the shareholder list. As I said, we're all very happy to have a tight list right now, and everyone is basically investing for that cash flow. So, it would be a shame to be fully diluted until then, and we don't think we need to go through that path alone. So equity may be part of it, and that's the nature of the business. But as soon as we can tap into some debt offtake or strategic level investments, we may consider it. And these are the options we're looking at already now, and we have ideas and options already.
Okay, but so no JV. I mean, that's not something that could be needed or preferred here.
Not a priority, because we think that whoever would be doing a JV with us would potentially be a buyer of the product. And my view is that if they're a buyer, then considering what is needed to build it and the lower complexity of what is needed in our early phase, they're better off just being buyers and clients of us, and contributing to the project via an offtake rather than a joint venture. So that would be our preference, to have anyone considered strategic or who wants to come into the project for the product, to come as an offtake financing solution rather than a joint venture. Now, as you explore for coltan, sometimes you find lithium, and that could be changing what I've just said, because lithium is not currently the focus for us. And wherever we would find lithium, I'm sure that some typical joint venture partners may be interested. So we would have to assess that and review it at that point. But right now, no traces of lithium on the ESIA project, which is the flagship, and it's solely focused on tantalite, which is the strategy.
Hmm. You're reminding me that we should get to talking about the off takers here, because that's an important part of every tantalum project because of the lack of spot price. So we'll get to that for sure. But it might be worth touching upon the history of these assets first, though, because how were you able to get your hands on so much ground before anyone else did in the first place, if it's as prospective as you believe it to be?
Yeah. So the history there is, when I first moved to Cote d'Ivoire in 2015, before founding Awale, I was already intrigued by coltan. I basically, when I came here, I the first thing I did, I went to the national mining library, which sits at the SODEMI, which is National Mining Company's office, and went through a lot of documentation, historic reports, historically literature had some coltan, which nobody really talked about. And the only company that had some assets in covering some of these coltan occurrences was the National Mining Company, which wasn't doing much. Everything surrounding those National Mining Companies' assets were covered by gold exploration companies already. So that locked the ground for me. I couldn't apply for it at that point, because the way the mining code here works is there's no overlap in applications. So if you apply for a given commodity, no one else can submit another application on top of you for a different commodity. So at that point, ground was locked. And that was in 2014, 2015. And 4 years later, when I decided to try my luck again by starting a new company, luckily, a lot of these exploration companies that had applied for gold had relinquished their applications. So it became free. So that's how I started pegging the first licenses, replacing. As soon as I saw the opportunity, I just reminded myself of all the floating coltan occurrences that had been documented that no one had really explored for. My view on this, despite not being a geologist, is of course it doesn't come from the sky, right? So there was a bigger game to play on top of just the coltan that was documented at surface, and I was intrigued by where does it come from. So that's where I started applying for the licenses quietly, and that's why the company was founded in late 2017, early 18. So I created a new company, applied for one license. Then the next license adjacent to it was also relinquished, increased the size of the package, and slowly started pegging everything that was covering historic occurrences of this metal, which grew into a very large portfolio very quickly in 2019, then 2020. And then it's really in 2021 that I realized that, well, this was getting big enough for it to be a company on its own. And I, in the meantime, I was approached by a few parties, as you suggested earlier, for joint ventures, etc. But they were more interested in, of course, some of them in tantalum, but in lithium. And when I saw that the interest was increasing, I said, well, maybe I should actually, run this myself. There's something here that's interesting. I had spent a lot of time on gold and wanted to do something a bit more industrial and aim to produce a metal. And that's really when we started the seed funding round in 2022 and kept that, of course, private. Decided to first prove a few things on the licenses. And that was what I was really trying to find before I felt comfortable to list it, which was you have all this coltan at surface, but can we locate the source rock? And the first objective for the team was that. So I told them privately what we got in terms of our first funding and the licenses were granted. I said, go and find me the hard rock. We need to make sure that we cover and we understand the geology and all this material at surface, because this has to be significant in size for us to build a company around. And we've achieved that. We quickly explored and understood what was going on and realized that surely it wasn't coming from the sky, and that a lot of the coltan at surface was just the weathered part of deep rock deposits. And once we had that comfort, we said, okay, well, how do we develop a story around this? And we said, well, let's go and quantify what's at surface. You have to mine it anyway. That's where the first shovel is going to be put. So let's quantify that and then transition into the hard rock and do the hard rock exploration thereafter, which is what the strategy is. We're quantifying right now the shallow part of the weathered material, which is what we call the placer deposits that has all the free dig coltan. And we are observing and keeping, refining the targets for hard rock deposits down deep in the form of pegmatites for the near term to have a long life story.
This is you're actually giving me an answer to a question that I haven't asked already, which is good because I was going to ask it, and that's the what work have you done in the past couple of years? So it might be worth looking into the future now. Last month, you announced the launch of your exploration program. What is it that you'll be doing here this year, more specifically? And if you can talk to me about it in terms of timelines as well, that'd be helpful.
Yeah. So the program we've just launched is the program that focuses on basically the cream, the cream at the top, sure. The shallow part of the deposit, the free dig material, what we want to start mining as soon as possible. And we do that in the form of systematic pitting, which allows us to have very representative bulk samples for each pit, and define a representative grade throughout those placer deposits in that layer. So that is work that we've started a few weeks ago, and we're accelerating that with the view to define a first resource later in the year, which would give us that resource foundation on one of the target areas. So you would see in the press release that we talked about two identified areas already for resource definition. One is target one and target two. So we made it simple. So target one is where we started. Hopefully we complete that as soon as possible. And depending on the timing we have in front of us, we might push target two as well to make it part of that resource. And in parallel to that, we're also converting some of the exploration areas into additional target resource areas. We're doing so basically, this is an incremental resource definition. We want to start with a good base, but there'll be some add-ons along the way, like you would see in a typical mining project. The first resource is not the last one. So we will add tonnage as we grow, but we don't need to quantify everything we have, especially considering the size of our portfolio, before we start something that could be cash flow positive. And therefore, we won't spend years quantifying it. As soon as we have something that is considered enough to generate a profit or just justify the installation of a first plant, we will move into a mining license phase and apply for it.
When do you think you're going to have the assay results?
The results would come through in the later part of this year. So the objective is to have that completed by year end. That's our current target. And once we have that, we can, for next year, the effort is more going to be around putting some studies and economic parameters around that initial resource. With the upside that would come from resource upside thereafter. But more importantly, that would give us the base we need to start talking economic terms and potentially start some discussion with some potential off-takers. The mining license application is something we think we can start filing on the basis of the scoping for this metal, and considering the simplicity of the processing. We already have some conversations ongoing with the mining administration around that. And luckily, next to us, just adjacent to us, you have a national mining company who started production or is about to start production on this historic project I've mentioned with a Chinese partner. So we see what they have done to get their mining license, and we'll follow a similar path. And it's a more of a fast track route than you would see, say, in a gold project in Cote d'Ivoire, where you need to be a bit more sophisticated to get the license.
Where are you sending it for assays? By the way, what's the lab that you're using?
We've been using in Cote d'Ivoire, as you know, you would have all the main labs will have representative, or they have a representation here. We have been using ALS as an independent lab in the past, and we keep using them. But the other guys are around. So we do. So in addition to that, we also have our own XRF, which we're in the process of installing, and it's very helpful for coltan. Not so much for some other metal, but in the case of coltan, it's really pretty accurate and very helpful, and it allows us to save a lot of costs. So what we do is we outsource the prep. And we do a lot of the assaying internally to select the areas and accelerate that resource definition. And we do very robust quality control protocols that we put in place, and we follow those quite strictly to make sure we're comfortable and to have the competent person signing off on everything we do.
I'm asking you that because I know that Awale has struggled with getting assays in and out of the country on time before. So in the context of timing, that's why I'm asking you where you're asking. What would you consider success? Like, what's the minimum barrier for you to be like, okay, this program, we've seen the assays and everything, that was a success. What's that minimum threshold?
Tough, tricky one. I have the answer, as you guess. Whether I can communicate that just yet is a fine line. But let's say a couple of hundred tons would be my answer. In the just to remember, tantalum is a very high value metal. So you're talking about right now, between 220 and $230,000 a ton. So when I say a couple of hundred tons, I think it gives you an indication of the value, the in situ value of what we want to define as a first step. And the margins can be quite high because we're using just gravity separation. There's no, there's not a lot of crushing and grinding and no chemicals involved. So it should give you an indication, and it fits quite well with the figures I communicated earlier on net cash flow and our objectives to start. So it could be a very low, interesting, low capex, high margin, couple of hundred millions of material in the ground for us to extract as a starting point, and I think that's a very good proposal.
What about on the other hand, or on the other end of that spectrum? Really, I mean, I'm always told that if I'm going to be failing, which unfortunately happens more than I'd like to admit, I'm always told that I should be failing fast. Right? What would that look like for you? I suppose a fail fast program, and how do you know to move on or let go? What would that look like for you?
Um, what I would consider failure would be something that can't even generate a margin, which is not well. You never say never, but it's it's because the material is there, and it's at surface in our case. So not that I've never thought about that, but I think the failure would just be that it's too small for a listed company.
Mm.
That's the failure that we would see. That it's too small for a listed company or to move the share price, and therefore it still makes money. It's still an interesting asset, but not big enough, and therefore we have to sell it to someone who builds it privately and grows it privately. And in that worst case scenario, we would just make sure we get most of our money back at the minimum out of that smaller exploitation that would be undertaken by someone else. So we do have, if you've seen the different communications we've made, I try to use the word, hedged exploration, which is really the tactic here. I mean, the downside is we should recover what we've put into it, which is not always the case, right? So it's good to be looking for bigger things and knowing that in your back pocket you have something that is a safety cushion. So that would, for me, would be failure. I don't know how you see that, but that would be failure, because I think if it's too small, of course, there will be no point running a listed company for something that is, well, not generating enough free cash flow for the share price to move. And therefore we would just say, well, it's a nice effort, good effort. We can make money from this, but it's a distraction. So let's just sell it or get someone else to make money from it and pay us for that profit that they would be getting. But it should be something that is saleable. Yeah.
Well, I want to talk more specifically about that, and specifically about the timeline that you have there, because it's an ambitious timeline that you're putting, a maiden resource before the end of 2025. And so maybe we can talk about, or really I can ask you about how tantalum exploration and mining works in the first place. And we can take it step by step from targeting through exploration, mining, processing, and then even the sale of tantalum, because it is a bit of an obscure metal, right? So starting off with exploration, if I understand correctly, tantalum-rich coltan tends to be coarse and so not always evenly distributed. Like you can have 2.5% Ta2O5 here, and then you can have 0.025% over there, right? 10 meters away or whatever it might be. How do you target for this? And how do you manage the potential negative effect here?
Yeah, so the first, so you're correct in terms of the difference in grade from one area to another. However, once you've located a target zone, and that's what we've done, and that's where we're doing the systematic pitting. As you narrow down the grid of your estimates, it's almost like as you do more holes, more drilling, in our case, more pitting, you you would reduce that volatility or that spread just because the average would fit with it. So that's how you reduce the nugget effect. But more importantly, you want to take big samples. So I explained this before, the real way to look at this is we're not doing pitting because it's cheap, which is the case. It's cheap, but or it's not a shortcut. We're really doing it because technically that's what makes sense. We could have done auger drilling or or RC or whatever you want to call it. But the problem is you would end up having a sample that has a few centimeters in diameter, and you would lose that representation of the grade. The fact that we're doing 1 and 5 meters deep pits allows us to have something that is bulky enough that we can then select and do a split on and systematically assume that the split is correct and give us a representation of that given pit. And we started with grids of 200 by 200 meters wide. We're narrowing down the resource area to 100 by 100. And going forward, before we start mining, we'll probably keep narrowing down in the mining areas, and that you would be surprised reduces the nugget effect in some ways because it gives you a good representation. Now, on top of it, you want to go in places where you have the more coltan nodules or grain or nuggets, depending on how you want to call them, and those are areas that generally are not too far from the pegmatites, because they're the source rock, and because coltan is so heavy, it doesn't move too far away from its source. So as you get closer to the source rock, you will see that you reduce that spread again, because that's where you would have a lot of the coltan grain sitting. So of course, if you go 1 kilometer apart from the main pegmatite corridor, you will see that you increase the nugget effect. But as you get closer to the source rock, you reduce that nugget effect. So again, it's also used for us as an exploration tool to find a hard rock pegmatite, because areas that we're defining and as the resource areas, generally all the areas where we also find some pegmatites, which is very comforting with our geological model. And it allows us to reduce or expect to reduce that nugget effect and be very comfortable. Now it's a bulk mining, finally, it's a bulk mining method. So when you start mining, you'll just take the whole thing and wash it. So again, the bulkier you get, or the bulkier the material, the less you see a difference in grade from one shovel to another. Just because the noise is reduced by the size of what you would be mining and washing. So that's what has happened historically. In places like DRC and Rwanda, it's also mined artisanal in an artisanal way, manually by the in those places. In Cote d'Ivoire, we've decided to go straight into industrial, and that's the difference between us and them. But the environment is the same, and there are some examples in these other places, tropical environments like in Rwanda, DRC, Mozambique have seen production. Nigeria have seen production of coltan.
Yeah. Well, what about weathering, though? I mean, as I mentioned, where you're at in the country is also kind of interesting as well in terms of just geographically. So what about mapping vertical zoning because of weathering here? Is that something that you have to do or think about when you're targeting?
We actually look at the topography, of course, if that's what you're referring to in
Yeah.
terms of vertical. So we're doing a survey for topography, a topographic survey on the area that we're doing resource on. So that's going to start once the guys have finished to position all the pits, which would allow us, again, it would be taken into account in the volume calculation. So we can't assume that the surface is completely flat. So that's something that is definitely part of the work program we're doing now, and it would allow us to model it properly. And the objective here is to come up with a block model. It's no different from what you would see in a typical resource definition effort. We will come up with a block model. Each pit is sampled every meter. So, you have 5 samples for every pit. We'll define the grade for each of these meters and try to link it to the next hole, and define those blocks on this initial 100 by 100 meter grid. And hopefully, we will be able to define an area, or at least a subsurface area in 3D that would be our resource. It may not start exactly from surface, or we will apply a cutoff that would mean that we only focus on, the layer between 2 and 3 meters, maybe, right? Because we find that this is the richest layer and we want to focus on that and make that the core of the resource. So if you project yourself, apart from how we're basically getting the sample, it's no different from a typical resource definition. It's just that in our case, we have opted for pitting to have a good grade representation when in some other hard rock or typical mining projects you would drill many holes and they'll be very expensive and you would only have a few centimeters of diameters and core to define a grade from.
How deep do you think you're going to have to drill this year?
Oh, the holes are 5 meter deep. They're so it's really just the top layer, like I said, the cream at the top. That's what we're focused on.
Hmm.
And in some cases, under 5 meters, you won't have much because there's no pegmatite or it's not sitting directly on top of the pegmatites. And in some other cases, that layer is almost interrupted by the outcrop. And this is nice to find as well, because as we dig some of these pits, we find more pegmatites, and these would be obvious targets for future drilling down deep, which is of course part of the plan. It's just that there's no reason to start with that right now. You don't want to take the drilling risk when you can start quantifying material at surface and start mining and making money from it.
How much money is that going to cost you, that whole program again?
The whole program we've budgeted in the range of, you always have some surprises here and there, but we've budgeted in the range of 400 to 600,000 on the ECR project to get there, and currently we're on budget to achieve that. That also includes something that is important to note, which is a small wash plant. So one reason why we decided to install that is, of course, to have good systematic washing of the pits, or at least the samples, to have great estimates, so to have our concentrate. But on top of it, it allows us to hit two birds with one stone and also do a bit of met testing. So we'll have a very small pilot demo plant that would allow us to do these tests on site and come up with the grades. Ultimately, that the assays that would go and get analyzed, but on top of that, give us more comfort and basically start working on the flow sheet, which is the next phase for us.
What when you talk about the next phase, that's interesting too. And then if you find something that is of interest here, would you then raise capital on the back of that, or like do you foresee having to raise capital before you have these news releases? Yeah.
No, we will wait for those releases before we raise capital. If we do, we really want to demonstrate that we've achieved what we said we would with the initial raise at IPO, and we're funded to do that. So we will achieve that before we start tapping into additional funding. The objective is really to keep our head down and focus on delivering that next milestone, which is the resource. Part of that would be a small pilot met testing that we would own ourselves, and in addition to that, we will identify some additional areas for future resource addition. So that's part of first milestone. Thereafter, we'll see where we are in terms of cash and what sources of financing we can tap into for the next phase, which should lead up to first construction or first production. That's the objective. Maybe it's split in two because there's a debt component, or maybe we try to do as much of it in one go with a view to secure the offtakes that would be complementary to it down the line.
What happens then after that is what I'm thinking. I suppose you have to do met work on it before putting it into a resource, or not. I mean, what's the next step after that?
There will be some met testing. More detailed met testing probably after the resource. The initial met testing would be part of why we put the wash pump together. So it would allow us to assume certain recoveries with a basic flow sheet or basic equipment that we would have installed and tested. And that's what we're doing it. So we should, that gives the comfort to the competent person to sign off on the resource. Now, of course, you can do some optimizations. There's new technology that exists that allows to basically recover. We would probably focus right now on the coarser, a few millimeter type material.
Mm,
And you would generally, if you don't have something too sophisticated, technology now allows you to recover things in a finer, basically finer material in the micron category. So that could be optimization in addition to recovery. So it can only be upside thereafter. So we would refine those med tests in the second phase, but we don't need to do them before. So we would focus on very base case. This is the typical equipment. What do you put in? What do you get out? This is the grade, and therefore this is the resource that you've been defining in that
mm.
area. That's the first step.
So is your expectation that there's no ilmenite, zircon, rutile, and so on, or what's your expectation?
Good question. There is
Mm,
some. They're just not as valuable right now as the tantalum, but there is some, and there is some value that we will get from that. The main trace elements that we're getting or co-products that we could aim for are right now at least what we see is magnetite. So a very high quality iron. You would also see that we have some titanium, a bit of tin, but not as much as you see in other places. At least not now. We're not seeing that much of tin, and that's pretty much it. I mean, on one of the projects, not the ISIA project, but our second project at Boake, we do have some monazite and xenotime, like these rare earths, which could have some value, but we haven't done enough work on that project yet to define whether this could be co-products or they're just traces of it. But historically, and in what we see in the initial work, we find those as additional elements to the coltan.
mm. But so your tantalum is not locked in gangue, or is it free?
It's free dig.
Okay, free dig. Yeah. Okay.
Yeah, so it's free dig. You find it in the soil, in the laterite. It's heavy and easy to separate from the rest. So what we get as a first concentrate is a black powder with some grains and nodules in it, very heavy. So that's why we define it as a heavy mineral concentrate within which you have the tantalum. So that's the product, and we want to get it to. We need to refine it to 30, 20, between 25 and 35%, depending on the client demand of Ta205,
Mm.
which is the tantalum pentoxide. That's the grade of the benchmark grade for the product.
What about any nasties here in that situation? Like, you might have arsenic in gold or in gold concentrate. I think in your case, that might be what uranium and thorium, but are you dealing with any potential penalty
Yeah.
elements?
No, the main penalty elements in our case would be anything other than tantalum. But generally, if you get that to 20 plus or ideally 25, 30%, you have a very good quality concentrate that is sellable with no penalties. Now, the penalties may come from the radioactive elements, as you mentioned. That's mainly because of transport. And shipping. There's only so much radioactive elements you can put on a boat. You have to be careful. So this can be penalty elements. Luckily, at least from what we have seen on our properties, we are on the safe side in that sense. We don't have as much uranium or thorium as other projects we can compare to have. Another comforting comment I can make on that is historically, some production from both areas has been sold back in the 80s and as late as in the 2000s. The National Mining Company has been mining and producing at a very small scale from these areas and has managed to sell product, including to a Belgian company that you probably know. They have been buying from here. So that is for me. That's the best comfort. So when we looked at this, I was like, well, if they managed to sell in historically and had no penalties, nowadays, yes, things have changed, but it's not that far out, and the product is still the same. And the demand has increased, and technology has improved as well. I'm pretty certain that we will be able to sell without much penalties. And I think in our case, it's offset by the high grade of the tantalum we have, which is the real attraction here.
But uranium and thorium are not to a level where you think they could be economically recoverable, or well, your expectation isn't that they are, or is it?
No, not at our level. Maybe, and I think there are more problems for the end buyers who actually refine it and separate the different powders. I doubt that they make anything from it, and ideally they don't want any of it. There's always a secret. Maybe they keep it for themselves, but on the mining side of the business, uranium and thorium in those quantities won't be economic, or they won't generate anything for us, and we almost don't want it because it would prevent us from selling a good quality concentrate.
What about lithium in these pegmatites here? Is there potential for that to be economically recoverable?
That's always possible. You would see that sometimes you have pegmatites that would be mostly mineralized in lithium, and they would have things like spodumene, which is the preferred mineral, or petalite, lepidolite, etc. in it. In addition to the other elements being tantalum, niobium, tin, etc. It goes back to my comment on complexity. So they can be very complex sometimes. So you can never exclude that. As long as you have economic grades of each, you can probably come up with a flow sheet that does both. Otherwise, you have to treat one as a co-product or byproduct. In our case, we would prefer really to be economic just on the tantalum and have a pure tantalite project. If we have some lithium, hopefully it comes, if it's there, hopefully it's in the form of spodumene, which could allow us to separate it without too many complications, and also potentially sell it separately. We have enough. Sometimes you would find that a pegmatite that is called a tantalite that has a lot of tantalum could have mostly very high grade tantalum in the range of 200, 400, 500 ppm, and would have, I don't know, 0.2% Li2O, which again you'll have to work on a project basis, but could be economically recovered, maybe not at today's prices. So this is where you have to work on your tailings. As long as you can make money from one thing, the rest is a tailing dam, and you can see if you can want to further recover more from it, or you just leave it there and deal with your environmental impact. I'm hoping that we are profitable on tantalum alone, and the first part of the project is just coltan, because all the lithium that may have been there anyways would have been weathered. So that weathered layer I'm talking about is pure coltan. It won't have any lithium, and we won't be able to produce lithium from that phase one because it would have been gone. It's gone anyways. Even if it's in the hard rock right now, we don't have any of that at surface.
If there is lithium, though, you would have to. I mean, the process might change. The processing process, I suppose, might change here too. Like you might need additional circuits, like I don't know, crushing, grinding, whatever it might be, or how would that work?
Yes, once we get to the hard rock, which is phase two, if we do find lithium, we will have to, of course, take care of it and the flow sheet might have to be more complex. Again, if the lithium grades are economic, if they're not, it would just go as part of the waste, right? That's effectively what the reverse happens on tantalum. You would find that many lithium mines produce some tantalum. They would have some of it. But if it's not economic to extract it, it's just left over in the tailings. So that's actually how the pegmatite mining complexity comes in. It's really you might have all of them, but you at least need one that is economic and allows you to build a project on. In our case, it looks like it's tantalum, and that's what we're doing. In some others, it's lithium, and they have tantalum in their tailings. Sometimes they can recover it, sometimes they can't and just leave it as is. Sometimes it's tin.
Hmm.
We'll see when we get there. That's phase two. On the pegmatites, we have found again no economic grades of lithium, and that again fits within the model and what we're chasing today.
Water is typically crucial in mining processes as well, so I don't suspect that's much different for tantalum operations, or is it?
No, no, we'll need water, especially for the upfront part of the flow sheet where you need to do some washing. Luckily, water is not a problem in Cote d'Ivoire, so that's very helpful. And the scale at which we're planning to use it is nothing compared to your typical gold mine or industrial gold mine. I mean, we this is good cash flow, but not as impactful in terms of how much water you're going to use or energy needs in the country. So
Hmm.
no big worry around that
Right.
in Cote d'Ivoire.
And this,
The good question, which is a good question because at the comparison, you'll see that in places like Namibia,
hmm,
you have a lot of projects who either chase tin, tantalum, and or lithium, and they face those complications all the time. We have this advantage of not having to deal with water problems and the additional capex that it would bring to a project like this.
yeah, yeah, exactly. Definitely in those parts of the world that you're mentioning, and I guess this already is kind of touching upon the mining process itself here a little bit. So it's a nice segue. But if it's as easy to mine it and recover it as you're telling me here, and there's water and everything, why are the artisanals not already after it? And when you're operating there, attract them to have a look at what's going on and maybe create potential challenges down the road.
That's where it's I like to say it's a nicely preserved secret because we have been very lucky that there is no large scale artisanal mining for coltan in this country. The main reason probably is because there have been no buyers coming and trying to buy at scale. So the local communities have not tried to make some money out of it as opposed to some gold artisanal mining you see in the rest of the country. I'm sure Andrew has mentioned it in probably some of the Awali conversation, or you probably heard it from other companies. Cote d'Ivoire has been locked for many years. I mean, it's a place that has been uh, focused on everything other than mining, particularly agriculture. So that has helped historically to preserve a lot of the geologic potential of the country. So that's the first answer. And when people came to explore in this country and more aggressively in 2010, 2014, under the new mining code and thereafter, most of the mines you probably follow today have been gold mines. So the first rush was for gold, not for coltan. Uh, Third answer to that is you had to really care and go into the National Library and apply for the licenses to lock the ground. And once you apply for a license, there is a bit more scrutiny on the area, and even the local communities know that they can't do anything they want.
Hmm.
Because as part of the license application process, it's very decentralized. The regional, there's a regional that it's a bit like the French system, right? Like you have regional directions for everything, which means that close to the communities you have COP that basically make sure that there is everyone is respecting certain rules. And artisanal mining is mostly legal. In order to start artisanal mining, you need a license in this country and to make it legal. And that's a process, and you have to go through the route and apply for it, etc. It's a long process, and you need to pay a few fees to get there. And surely that has prevented a lot of the locals from trying. And there was a lot of scrutiny on the areas to make sure that nothing happened. I mean, I applied for licenses back in 2018, but even at that point, before getting the license granted, I had some relationships going on with the local communities to make sure that they would keep us aware if anyone was coming in the villages trying to buy coltan.
Hmm.
To be honest, some people have tried, but luckily, because we had briefed them and we had already put in place that local relationship with the communities, it allowed us to get the information as soon as 10 minutes after they met whoever was trying to buy from them. They would call up and say, "Well, is it you that brought someone to buy coltan in the village?" And of course, the answer would be no. And they'll be like, okay, well, this guy said he would buy, etc. This is his contact. And then we would call the person or ask the regional direction to call him. And that kind of gets them away. So there has been attempts, but because of the way the mining sector and the administration is organized here, we have managed to control a lot of that historically. So that's fourth part of the answer. The fifth one is a lot of people were getting it already from DRC, Rwanda, and other places, right? So if you have what you need in other parts of the world, you don't try to open new frontiers, and that has changed. You see now that a lot of the buyers are really quite aggressively looking for alternatives, and that creates an opportunity like Switch. We can start from scratch in a new jurisdiction. And there is a good reason for us to do that. Historically, maybe we would have been desperate to find buyers and attract their interest. Today, we have buyers who are really waiting for us to start producing something to buy from us. So that's more a timing, timing aligning the planets, I like to call it. So we're quite lucky to be in this situation at this time.
I also assumed it's a bit of end product challenge as well. Like it's easier to produce or a gold from placer, maybe panferrite or whatever, than it might be, a tantalum concentrate or something. Because that's what you'll be selling in the end, right? It's a concentrate. You say that it could get up to 30%, right?
But in fact, the whole panning is not that different. If you look at how artisanals get it out, in other parts of the world, you would see that it's the same. It's pretty similar to how gold is mined in an
Hmm.
artisanal scale. It's hand panning, washing. You get the gold, the coltan powder or nuggets out, and you can sell. I think the main difference is quantity and finding a buyer. Of course, if you find a small gold nugget, it already has a lot of value, right? Coltan has value, but not as much as gold. And therefore, you need a few kilograms or a few tons of it before you can sell it. So it's a lot. It's very hard to do it discreetly because at some point to get the quantities, you would need to have many people, and that's where a lot of the images that you would have seen online or elsewhere in documentaries, etc., show you thousands and thousands of people in the field in DRC, Rwanda mining this stuff because you need quantity before you can sell to anyone. A buyer is not going to travel to Cote d'Ivoire to buy just 2 kilograms of coltan. They won't care about that, but they would definitely fly over to buy, a few grams or a few hundred grams or kilograms of gold, right? So that shows you the difference in size of the product, which is the main difference. But the way it's mined, it's pretty similar at the artisanal scale. And the fact that the guys didn't have, serious buyers coming here to buy it from them didn't push them to, mine it either legally or illegally up to this point, which is a big chance we have.
Having mentioned that end buyer here is a good segue into talking about the tantalum market as a whole. But if I understand it, the metal doesn't sell like copper or gold mine. Like you don't just, call or email an end buyer or trader or whoever and lock in a market reference price and then start selling because, and again, correct me if I'm wrong, but there isn't a transparent spot market for tantalum, which means it's all offtake agreements that the producer, in this case you, is responsible for. So, we've gone through targeting, exploration, discovery, mining, and recovering it. And although I understand this is forward looking and everything and way out in the future, but you still have to sell it to make money off of it, right? So what will that process look like for you? And do you have or know how to acquire these connections so that you can get a fair price for your end product?
Yes. So you're 100% correct. It's not traded on the spot market. It's not like other commodities. It's a contract-based trade. You would enter into contracts with given buyers or either contracts that would be future sales or spot sales, but they would be contractual as opposed to something you can see the price of. So that creates an opportunity also to define the value of your own product. And, we're thinking about, positioning ourselves on the market as well, right? So because we're opening a new source, we want to be, and that's where we insist on being ethical, responsible miners in a conflict-free jurisdiction, because it's almost like a label that we want to create. So it's all part of how we brand it and how we position it on the market. So it's very important for us. So yes, it's contract based, and but the demand is one that we all know, right? So it's the end electronic makers that would be using it. They generally go through processing facilities that they purchase the pure powders from. And these facilities wouldn't sell them coltan. They would be buying either electronic components or pure powders from those processors. The processors themselves either source from us directly from the miners, or they source it through traders. So there are a few traders who focus on niche metals, and you would find generally that they don't focus just on tantalum, but they would be doing tin, tungsten, and tantalum, and of course other metals. But some of them have decided to focus on the three T metals, and those would be the traders that we would speak to if we speak to these intermediates. In some cases, and we've already initiated some of these conversations, we have direct inbound calls from the processors, who are good clients for us as well. But the arbitrage there is: do you want to sell directly to one given processor and not have visibility on the full market, or do you want to go through a trader who's going to open his book and show you where you can sell it at the right price? So that's where we make a decision. You could do both. You could do one, but there's no lack of options to sell the product for sure, because the demand is so big and because the players are known.
Hmm.
So right now it's I wouldn't say it's the least of my problems, but it's one that I think we've already solved even without producing. We have demand from both options, whether it's traders, whether it's processors, and we haven't got a first concentrate yet. So it's a very good position to be in. We will, of course, maintain those conversations and try to sell as soon as possible to any of them. But be sure that there are, despite it not being a spot market, there is different ways to have the best price out of it, and we're working on different options, and not putting all our eggs in one basket is probably the right approach right now for us, until we have full comfort with one given buyer and we're really happy to build a long-term relationship with them.
I wanted to ask you how sensitive the pricing is, but it might be a better question to ask you, what is it sensitive to? I mean, I suppose it is supply and demand, but how do you, again, with gold, it's kind of easy to understand what drives both ends, but with tantalum, how does that work, and how sensitive is it? How volatile is the price?
It has been somehow volatile, but it's not a daily volatility. Let's put it this way. Now, if you look at what happened in the past, say 10 years in that price, it has been going up or stabilized. And the reason is pretty clear. I mean, the one way to look, if you, as you say, you look at gold and you understand how the demand and the supply works, and how, why it's going up or down, etc. Well, for tantalum, it's even simpler. How much more electronic devices do you think we would need in the future? And it's a finite source as well, and it's one that you can't find. It's not like iron ore. It's not like some other bulk commodities. It's one that you can't find in too many places. And despite the small size of a given production in one country or another, the demand is constantly increasing, and that's what you have seen in the past few years. It keeps going up, and then the volatility might come from one source being closed. And that's what we have seen more recently with DRC and Rwanda, which has created a slight peak. but it doesn't mean that no one is buying from there. I can tell you. I mean, there is still some trades, right? As long as the supply still exists, it will be pretty stable or going upwards just because of demographic demand or new users or the way we live today. And that's why we decided to bet on this metal. It has very robust fundamentals. And in addition to that, you may have some peaks that come from another factor, which is the defense industry. So when you have, fortunately, I don't like to promote that, but when you have people, increasing noises around fighting, opening new fronts, that would create more tantalum demand. So that also creates a peak in demand and therefore a peak in prices. You have seen that for the metals like tungsten, antimony, and others. So tantalum is no different. It's probably one that is kept secret, but definitely one that follows the same trends.
How would the permitting process for a tantalum operation work in terms of exploration as well as mining in Cote d'Ivoire?
It's pretty similar to other commodities, including gold. So the exploration follows the same mining code, and it's 4 years from the first granting before you have to renew. So it's 4 + 3 + 3. So you have up to 10 years to explore on a given property, and that is a large scale exploration. The license can be as big as 400 square kilometers each. We have a couple of them and we cover over 3,000 square kilometers. So that's the exploration part. So it's it's the same code. On the mining part, same. You can mine. You apply for a mining license. When it's granted, it might be up to 10 years or more. You produce a study and negotiate a convention with the government. The only difference between us and say gold, which is always a good comparable when it comes to Cote d'Ivoire, is, as I mentioned earlier on your good question, the royalty and some of the fiscal terms in the convention. In the case of coltan, we expect it to be around 3%, and a free carry of 10%. In the case of gold, you have a scaling grid royalty that depends on the gold price and might go up to 6-7%, if not more, going forward. So that's where we have more stability. In our case, it's assumed to be a flat fee, and the reason why I say assumed is because as of now, there's no coltan production out of the country. There has been historically, and 3% was applied. So I don't expect that to change. And the mining company, the national mining company, is about to start production, and that would be a good, comparable or good benchmark for us. And they also model 3% as a royalty to government and 10% free carry. So that's pretty much what you expect for a gold mining project or any project in Cote d'Ivoire. The royalty is probably the only change in our case.
Maybe you can talk to me more about that as well, though, because now that Cote d'Ivoire seems to be getting busy with majors and mid-tiers and early stage and advanced explorers and everything in between, really. How is that pressure affecting the government and the permitting infrastructure, if you will? Are things about to start taking longer for getting a license granted or to get a drilling permit or something because of kind of overload from the permitting perspective?
It has sometimes been quite slow already, and I don't expect the interest from new players to make it slower. I think the administration has made some effort to accelerate or at least restart some of the granting. It was stopped for a few months a few years ago, and then sometimes they kind of work in cycles. Because we're quite close to them, what we know is that they're going through a process of trying to digitize a lot of the application steps, which will help. Hopefully that comes on stream and we can all participate and make sure it's a smooth transition. But if they do that, I'm sure that will help and accelerate the process. For the rest, it's really a question of following your your applications. There is a lot of complaint, even including myself. I mean, I have been complaining sometimes to the administration and others that the process is too slow. The reality is that yes, it is perhaps slow, but you also need to follow your files, and that's the best way to make sure that something doesn't get blocked along the way without you finding out why. So me being in country in the case of Switch, and to some extent in the case of Awali, has helped in making sure that we progress things, and at least we are available when the guys call, and we're not sitting in a different jurisdiction waiting for the license process to follow the procedure. I mean, I think that is having local presence is probably the first answer to that. So I would advise whoever is interested in Cote d'Ivoire to make sure they have good local presence, and stay close to the administration to make sure that they understand why the file is not progressing. Because we can all criticize, but the reality is that if you really want to progress your projects, you need to follow what's going on.
How is it from the perspective of corruption? Does that still happen where maybe your application is lying on someone's desk, but in order for them to look at it, you might have to sweeten the deal? Is that something that still happens, or how does that work?
Still would mean that it has happened. I'm not aware of that, but without again without trying to make any jokes. I mean, the reality is, since I arrived in Cote d'Ivoire, I didn't have to do any of that, and my file has progressed, and I don't know how many now, but I've managed both on the Awale side and on Switch to have many licenses granted up to now, and we've been quite good at getting them. Of course, you have to be patient. And that's probably where some people fall into the trap of giving stuff. And my view and my condition has always been, patience is probably, if someone wants to do something tomorrow, I'm not the right person to work with them. And that has worked quite well with Awali. Sometimes, I know investors and both on Awali and Switch, probably people want things to be done tomorrow. The reality is that, well, we're in a jurisdiction on a continent, and to be honest, I'm not sure it happens in 24 hours in other jurisdictions either, right? So you have to be patient. You have to follow your files and force yourself not to listen to any solicitation if you have any. Ultimately, the administration is there to do their job, and they have done it. So unless people see that you're tempted to give them something, surely they don't ask. So that's my philosophy, and luckily we've built businesses with that philosophy. So we'll carry on.
Well, it's good of you to correct me, because that was my assumption. That maybe it used to happen before. It was kind of my assumption that it happened everywhere. So it is good to correct me on that. We don't necessarily know or have any specific, or I don't necessarily know or have any specific examples of such happenings. I think I've been through a lot of these things. Might as well touch upon what's going on with the financials of the company a little bit more in depth. You said, and we've touched upon it throughout the conversation as well, right? You told me you have about $1.5 million, or I saw that you have about £1.5 million now. You told me what it's going to cost you to explore. What about running the company? G&A, what are you budgeting for administrative expenses?
Yes, so we try to keep the G&A. I mean, the G&A annually in, because we're listed on in London now, and we have some running costs which we try to minimize, but you would still need between 500 ish annually to cover all the top co costs and admin. That's the cost of being a listed company.
Yeah.
In our case, and we try to minimize it. Some people have doubled that. We try to keep it in that range, and that includes everything. From keeping the accounts, paying some of the listing fees, and the board management, etc. All captured in that figure. The rest of it is directly into the ground, and that's what we're doing now, and that's what we'll keep doing. We really want to achieve that first milestone with the capital we have and what we've raised, and we'll then look at options. we really try to be disciplined, and it's the nature of our project allows us to look at different options thereafter. So we're preempting on those discussions already.
Does that 500, 600,000, so let's call it roughly 40 to 50 thousand pounds a month, does that include marketing?
Yes, yes, yes. We on marketing and again, I mean, we can use this window to discuss it. I mean, some shareholders would want more marketing to be done for sure, and that's always the ask for shareholders. They want the story to be out. I've tried to do as many interviews as I could with running the business in parallel and trying to create some content. The reality is that you never do enough, and it has to come with news flow as well. So we have to make sure we keep things running on site and put most of our capital into getting results out. So there is a balance that we're trying to find that includes marketing. I'm based in country. I like to be here and I run the business from here, so it helps in terms of travel costs. I haven't done or I'm not planning to do many travels for conferences, etc. just yet. I think we just need to hit our milestone, have something in my back pocket that then I can go and present and promote face to face with investors at different conferences. Luckily, it's not too far away, we believe. So it's not that I'm going to be hidden here for for years before I go out. So we're talking months, and I think it's a good discipline to keep. There's no point me pitching and being at all sorts of conferences right now until I have something more material to present. And I don't know if you're going to hear many CEOs saying that, but yeah, that's my approach. That's who I am, and I prefer to stay discreet until I have something more meaningful to tell. And in the meantime, interviews like yours, I think, are more than valuable, and they allow us to get the story out. People can get a sense for what we're trying to do for the management, for the country, and that's probably what we want to do right now. And we'll add to the marketing budget when it makes sense.
Is being listed on the London Stock Exchange the right choice for you here? Though I mean, I know you have experience in London specifically, so maybe that's where that comes from. But do you want to stay listed on the LSE, and why?
You touched on one reason. There is the history of me in the UK. That has definitely been part of it. I can't say no to that. Now it's not the only reason. I think another one is Africa, which is not the only reason either. But the UK has a history with Africa and mining in Africa. It has changed slightly, but still is the case. The reason why I say it has changed is because, of course, Australia, Canada have opened themselves to Africa as well. You have a lot of exploration stories listed there nowadays, but historically the UK was putting African stories in front of investors earlier, and then there is the metal that we're chasing and the strategy. I think London in the near term will understand cash flow and tantalum as a good commodity, and because we see peers there that are not focused on tantalum, because we're probably the only company giving as much exposure to tantalum, but you have a lot of tin stories listed in London. And the trading part of the business, the fact that it's also closer to Europe and in Germany, Belgium, as an example, where we have clients. So I think it helps for the marketing. It helps for the attention we might get from investors and shareholders, and the African component. Plus, a small part of it is my background, but I wouldn't say it's the only one. I mean, Awali is listed on the TSX, and that was also me in the background with the rest of the team, of course, was leading the charge, but we decided to list there. So in this case, I think London is the right fit for Switch, and I think there's a lot of room in London for new stories. I'm a big believer that London would rebound,
Hmm.
and now is the right time for it to for a story like ours to be positioned and hopefully profit from this rebound in the mining small cap mining stocks.
So no immediate plans to list on a different exchange then?
No, no.
No.
Again, and I think the reason for that one is the reason for this question is just a discipline in terms of capital, right? I think having one listing is more than enough for us,
Sure.
and we will focus on that and just we've made that decision. We also found to add to my answer earlier. I mean, the other reason was to find the right shell. Or the right SPAC to merge into. As I said, I'm very pleased to see that we have shareholders who still believe in the stock. And I have looked in the process, I have looked at shells in the UK and in Australia and couldn't find any that were ticking all the boxes for me. So this Onero Energy PLC SPAC deal that we did is one that also, of course, counted in the decision, finding the right vehicle to list, and it happened to be in London. So
Hmm.
surely that's an important part of the answer.
Yeah. Well, yeah, that is it's an interesting discussion to have there, specifically relating to the exchanges, because the different markets seem to be behaving way differently now that mining is or exploration is a bit out of favor. We talk a lot about Canada versus Australia, London definitely going through some tough times now. So it will be interesting to see how that develops and how your story develops as well. Again, I think I've been through most of the questions that I had here. What do you Nothing's ever perfect though. So what keeps you up at night? What are the main risks or what are main challenges that you foresee here?
The main challenges we foresee right now is to meet the target timing and the target results that we internally set. So year end, coming up with that first results and talking about something that is even more tangible than the story I've been telling today. So that's really what I'm waking up for every day right now, delivering on that, because I think everything will be very different thereafter, because we will be able to have something tangible to really start talking about our production plan. So that's the focus. Of course, making sure all everyone on site is safe, and it's a lot of hard work. So we care about our team and making sure that all the day labor, all the guys we have on site, were making the effort to get us there are safe. So of course, every day that passes where we don't have an incident is a good one.
Hmm.
And then I think once we were delivered on that, this is going to be a very interesting story. Getting the tantalum word out and making sure that people know tantalum and realize how important it is. That's another challenge, and not keeping. I'm sure people will find that out, but it's part of the challenges that we have in the near term, and we're working on it.
Hmm. Well, this has been a good conversation, Carl. I think, or I'm hoping we're going to have another one sometime later this year. And for people listening, if I'm forgetting to ask something, do let me know what I forgotten to ask, and I'll ask it in our next conversation. What about you, Carl? What do you think I'm forgetting to ask you? Or what did you come here hoping to talk about that I've not brought up?
No, I think we've covered a lot, probably more than I expected, and
Good.
and thanks for asking all these good questions. It's very helpful. And I like the format of the interview, which is a proper conversation. And thanks for having me. Thanks for giving me the time to explain and touch on these topics. And hopefully, I've answered your questions. And if not, then again, feel free to ask them again, or follow up with any emails, or tell me what I need to clarify, and I'm sure we'll find another window to do so. Or hopefully you can relay the information.
I really appreciate your time as well. So thank you so much for sitting down with me today.
Thanks, Antonio. Thanks very much.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."